All right, thank you so much for staying with us. Again, Donald Trump's return to the White House has sparked many reactions across the African continent, including Nigeria, where President Bola Tinubu has sent his best wishes to President-elect Donald Trump on his re-election as the President of the United States, marking him as the 47th person to hold this position. President Tinubu expressed high hopes for enhanced synergy between the two countries, particularly as both face a range of global challenges. But many Nigerians are opposed to his anti-immigration policies. Trump did acknowledge Nigeria's importance for Africa. Well, indeed, he did that. He made President Muhammadu Buhari at the time the African leader to call in 2017 during his first term. Nigeria saw some gains from Trump's transactional foreign policy. The country may benefit from increased trade and investment, particularly with regards to oil and gas, if those align with the interest of the United States. Well, on the price of crude oil, that's talking about the president-elect. Policies aimed at boosting domestic oil production in the U.S. Is what everyone thinks would lead to an oversupply. And if that happens, if there is oversupply, that could contribute to a decline in oil prices. Well, let's get talking. And now, Mr. Olushola Oreo-Yeniku is the head corporate strategy and investors relations. He's with Keystone Bank. Thank you so much. Good afternoon, and thank you for joining the program.
Good afternoon. Thank you for having me on the program.
Yes, I think it's good to start with your general overview of Trump's presidency. Really, what difference does it make?
Okay, so I believe people widely spoke through the ballots, and that is something that we were unable to do anything about. Yes, there are various discussions before the election on who and what people will do. But then it is no more news that he has been elected as the 47th president of America. And as such, there's huge implication for the global economy, even the investment community also. Policies, from the monetary to fiscal policies, trade and tax and other regional alliances are part of the things that this would impact on. Also, we will not forget immigration at this point. So this election marks a very critical point for global economy with significant implication for geopolitics, economics, and partnership in an economy, a global economy that is multipolar as we speak now. So we believe that this is expected, and then this will signal, like we know what he did at the first time, potentially those will continue, and then there will be some extension of some other policies from his first time. These are likely to come from a tax cut to Job Act, increased tariffs on imported goods. It's also deregulation and other policies tailored towards reducing government spend in some areas. So the differences are probably going to be from fiscal deficit increase, likely concerns about inflationary threats, and also some of this will weigh on economic growth and the fuel volatility in certain markets. So that are some of the things that we are envisaging will happen. But then we tend to continue to look at that space and then advise the market accordingly, knowing fully well that during his campaign and also in some of his manifesto, he had mentioned that these are some of the things he wants to do, and those are the things we've seen that he did during his first term. So we will wait to see how this will pan out for the market and then for the global economy.
Indeed, because you've mentioned this protectionist policies, and I also see that too. Many talk about his protectionist policies, and but the implication for a country like Nigeria, that basically it's been almost a transactional relationship that we've had with the United States, more of selling crude and getting funding, but we're not doing so very well in the non-oil space that we would have been able to take advantage of other opportunities. But considering his protectionist policies, what do you think this means for our relationship transactionally?
Okay, so to start with, his protectionist policies are primarily America first, buy America. And that we've seen from his first term, reducing imports and increasing tariffs, prioritizing domestic production, and then the loose monetary policy. Remember that when it came in around 2017, the policy rate was about 2.5%. But by the time it was on its way out in 2021, it was near zero. So for trade relations, his position is primarily to raise tariffs in order to rebalance U.S. trade relationships. And as such, he would prioritize other nations by increasing tariffs on goods. He had mentioned that 60% tariff will be on goods that will be imported from China. So also on the monetary policy side, like I directly mentioned, we see that once that happens, we see investors seeking higher yield assets. They start looking to emerging market whereby there will be increase in capital flows, which might likely also impact on our reserves and then support Naira. For the crude oil, so shale oil is about 12.8% of global oil production as we speak. So, and we know him to support domestic energy production. He did it during his first term, and I said they would do it. And as such, export of U.S. crude will see. So that might likely impact on supply. Yes, we might not see that supply glut, the trajectory of that supply glut that massive, but we'll see. Given the fact that we have about 893 oils that have been drilled but not completed as April, or that's oil wells. So we're positive that he would see to that. Completion of that would increase supply, and as such, likely oil price. Yes, it will tilt some of the projections on oil prices. However, the magnitude of the tilt is what we are yet to see. So for oil-dependent nations like Nigeria, our oil receipts projections might not go the way it should be. So what we are likely to see is, as a country, we need to rev up our production. And also, we also believe that the OPEC Plus, we have likely spirited policies around oil production costs so that the magnitude of impact of this on oil prices will not be that much to really tilt anything. The variance of its tilting will not be that much. For global dynamics too, power dynamics, strategic importance of Africa is also very important. During his first administration, we saw that there was intense competition between US, China, and Russia in order for them to have influence on Africa, and that we continue to see. That led to what we are seeing in some part of Africa now, infrastructure development, because China came through. And as such, that we might also see that significant investment also, if this would continue, especially in infrastructure. For security and counterterrorism also, we know that we also see that. We remember what during his tenure, because it's so much believed that extremism is being bred in Africa, and as such, we believe it will increase intelligence activities and also military activities in order to keep in those. However, one of the things we should look out for is if there are no clear strategy, long-term strategy around that, then it will become a transnational engagement like we saw at the other, the first tenure that he also did that. So we expect that this will be things that will be guided against by African economies. Also for climate change and energy policies, it was not that a big fan of that during his first tenure. And that we believe will possibly slow down some of the climate initiatives and then sustainable development in terms of climate change and others. We might see that it might tilt down. So especially for countries that are fighting energy crisis, there might be a delay in their transition to energy sources. So all these are in the mix of his protectionist policies. So for countries like Nigeria, knowing fully that oil receipts might be suboptimal, and as such, our budget deficit will increase. So we need to look intently at strategic initiatives around our oil production, deliberate effort to increase that, so that we'll have more in terms of receipts, our reserves accretion will increase, and then that will help the Naira. On the loose monetary side, so we believe we will tend to see more capital inflows, given the fact that some of the monetary policy activities that is in place now, we'll keep seeing how this will pan out, and then some of these results would endear some of these foreign investors to come in. And then if there is a relative stable exchange rate regime, then that will also bring some of these capital investors into Nigeria. So all those we're expecting to see. For the export revenue, one thing that we won't take out is the fact that our export to the US as at Q1 2024 was about $4.86 billion. That's about 6.8 of our total export. So that will be severely impacted, and majorly from that 6.8 for our 4.86 billion was mineral oil and fuel, which is about $4.53 billion. So if that is impacted, we know that to impact on our receipt, our export receipt, and as such, we need to also have things that are wrapped around that. So we need to look more into the non-oil revenue side of our inflows, and as such, that would really impact on whatever we are doing, policies that government are putting in place. But I believe that from the monetary to the fiscal authorities, they are also aware of all this, and I believe they are putting in place certain measures and some policies to ring fence whatever we have now, and also to expand our hold in our non-oil receipts so that we can benefit from whatever it is that will come out of this.
It's really interesting. I like the way you're taking it from one point to another, really breaking this down. Let's look at the markets now. Of course, we must talk about the markets. We saw what happened immediately after the elections, and we see the likes of Elon Musk throwing their weight behind Donald Trump, and we see what also happened in the crypto space. But my question really would be, does it mean anything for the markets looking at his body language, if I can use that?
Yeah, so going by what happened during his first time, it would be appropriate for anyone to think the loose monetary policy environment is what we'll see. He had rightly mentioned, during his campaign trail, he mentioned all those those are part of things, because for interest rates to be lower in that environment, it means a lot. It will improve better a lot of economic growth and others. And for those with mortgage loans and all those are people that those would impact on positively. So we are not really seeing anything different from what he did. Remember the other time I mentioned that in 2018, policy rate was about 2.5%, but when he was on his way out as at Q1 2021, it was near zero. So that was simply speaking to his belief or his body language. So we believe that this unwavering stance to support growth, increase production, that's domestic production and exports, would continue, and as such, we might have to see that. So adopting a more accommodative monetary policy similar to his first term is not something that the market is not expecting. However, for the equities market, like we expect the inverse relationship between the markets to kick in as investors will start scanning for opportunities to optimize their investment gains, so especially in safe haven environment. So we expect that the robust earnings growth as we start seeing now in the market should drive continued equity market appreciation in the near to mid-term. And also, given that economic growth is resilient, so to say, given what IMF has projected over the weekend, I think there was a document last week or so saying global economy will increase by about 3.5%. Yes, not up to the pre-pandemic, but then you see that is revving up to average of 5 years. So we believe that a more given more cut rates by the Federal Reserves will pan well for the equities market, and the outlook for the equities market is robust, given that. So, and that we know that will also filter into some other emerging markets and in developing economies like Nigeria, because funds from such economy from the US will start looking for economies where there are stable policies, and then the markets and then the assets too are also doing very good. So we'll continue to see that for the stock market.
All right, then it's interesting to move on and say, what's there in for African countries like Nigeria? And it's not all about us always seeking to get from the United States. What do we also have to offer African countries or countries like Nigeria?
Okay, so for us, my sense is, so once we hear the hawkish monetary policy, remember that about 5 past meetings that we have now, the MPC meetings, our MPR has been increased by around 850 basis points, 5 consecutive meetings. So that has not really addressed the galloping inflationary threats that we've seen since last year. And so once we hear that there is a decline in monetary policy, say in America or somewhere in the UK, or most analysts, what comes to mind is, okay, so we need to keep increasing so that attract capital flows. But we don't believe that is the case, because it has been proven that over the years, rising interest rate has not really addressed that galloping inflation. So we believe that that though to boost our chances of increasing our capital flows, if our business environment and policies are very friendly. So we need to have a relatively stable exchange rate environment, and that will give investors that confidence, that comfort needed to appropriately plan and also benchmark their own returns in order for them to be able to have that sit back and say, let me invest in such economies like Nigeria, because there are friendly policies. The exchange rate is also very good. Another one, so what we need to also do is to have an impactful inflation rate management, targeted policies that will provide apt results around our inflation rate, because we know how that erodes value. So also that we need to do. I believe we also need to map out investment-friendly policies that will boost confidence and also propel interest in our capital markets. All this, if we do, we believe it will pan out well in terms of us capitalizing on that. Also, our key macroeconomic reforms. Yes, we have a lot of robust macroeconomic policy reforms that is ongoing. We believe that once that starts improving, once that starts seeing results around what those policies are doing and what the economy is doing, the nation's risk outlook will decline, and as such, investors will be more interested in coming to invest in Nigeria. Also, we may need to consider some other alternative strategies, such as fostering regional trade, increasing non-oil export, like I mentioned earlier on, and also some apt structural reforms to reduce the expected issues around the policies that will be witnessing or seen from America as we speak. So if we put all this into place, this would really pan out for Nigeria, and then we'll be able to gain from this. Also, one major thing is about the immigration restriction. We know that average annual diaspora remittance from US about 20 billion in the past 5 years or thereabout. So we should look to calibrate, look for a chance in order to calibrate our foreign policies objective, and also our overall relationship with the US under this presidency, so that we'll be able to amass whatever gain and optimize values for this country. So we just don't want to sit back and suck in some of these policies and its impact on us. So we need to also do all this so that we'll be near ready. However, like I said earlier on, I believe the authorities, both from monetary and fiscal authorities, they are seeing this, and these are well being discussed as we speak, for them to also tighten the noose around some of these things that would pan well for us. So I believe all these some of the things that we can capitalize on in order for us to gain optimally from some of these policies that we're expecting from the US, given that Mr. Trump is going to be on very soon.
I must thank you so much, Mr. Olushola Ore Oyeniku, the Head Corporate Strategy and Investor Relations, Keystone Bank. Thank you for making sense of this topic. Hope to see you again soon.
Thank you very much for having me.
All right, there. It is time to now stay squarely with markets, and if younger ECOP markets